All right, everyone. That was a fantastic fireside chat. We'll be moving on to the next session here for TokenizeThis 2024. This is the deep dive into Project Guardian. Slightly different format for this session. We'll be starting with a 10-minute presentation from Stephanie Lok from Onyx Digital Assets at JPMorgan, and then we'll be followed right into the panel. So without further ado, Stephanie Lok, everyone.
Perfect. Hello. Hi. Thank you so much for having me. Super excited to talk about all things Project Guardian. As Jason mentioned, I'm Stephanie Lok, and I'm a product manager on the Onyx Digital Assets team as part of Onyx by JPMorgan. So before the panelists join me on stage, thought we'd give you some insights into Project Guardian, what we built, a little bit of the challenges that we were looking to solve. But before I do that, wanted to give a bit of a background on who we are as Onyx by JPMorgan. So Onyx is JPMorgan's blockchain-focused business unit where we've been exploring and building products leveraging blockchain technology for the past 10 years. And as a result, we've solidified what we've been doing and have broken it down into 4 different focus areas. The first was Link. Link is our payments information network that's on-chain. The second is JPM Coin Systems, which is our on-chain cash solution that leverages blockchain demand deposit accounts. And then jumping over to Blockchain Launch. Blockchain Launch is our research and development arm for Onyx, focusing on all things Web3. So really looking at that 5 to 7 year horizon in terms of what's new, what's cool in this space. And then Onyx Digital Assets. So Onyx Digital Assets, or ODA, is our multi-asset tokenization platform that enables clients to unlock untapped utility in their financial assets. So ODA is a true unified ledger with tokenized assets and on-chain cash like JPM Coin on our platform. We are currently live with 3 applications where clients are actually moving and settling value, where to date we've actually settled over $1 trillion of notional volume. So the first application we went live with was digital financing. So digital financing is where borrowers are able to receive liquidity on an intraday basis and receive financing in exchange for collateral. The second application was Tokenized Collateral Network, or TCN, where users are able to tokenize and use assets as collateral. And finally, Digital Debt Service. So we actually just went live with Digital Debt Service just last week, where it facilitates the issuance, transfer, settlement, and automated servicing of debt securities. So those are our 3 live applications, but you'll see on the right side, these are some of our focus areas for ODA moving forward. So first, investment fund tokenization, which ties in very nicely to Project Guardian, which we'll cover. And then we're also looking at a few other use cases that we'll want to deploy on the ODA network. And finally, we're actually opening up ODA. So really looking to bring on third-party owned, third-party developed applications onto our platform. So with ODA's vision of unlocking untapped utility for the world's financial assets, we thought that Project Guardian would be an amazing opportunity to really look at what that future of fund tokenization really looks like. So many of you may have heard about Project Guardian, but at the end of last year, Onyx and Apollo co-led this initiative under the Monetary Authority of Singapore's Project Guardian initiative. We focused on the asset and wealth management industry and how we could transform the model portfolio space by leveraging smart contracts and tokenization. So we targeted the $5.5 trillion market in building discretionary portfolios for individual investors. So discretionary portfolios is essentially an investment solution that wealth management firms can offer their investors, where they can provide curated, personalized investment portfolios based on their financial goals and their risk appetite. Our goal for this project was really to enable a portfolio manager to seamlessly manage a large number of discretionary portfolios that includes both traditional assets and alternative investment funds that are tokenized on multiple blockchains. Now, we didn't just do this proof of concept just because we thought it'd be super cool to connect 3 different blockchain networks and tokenized some assets, we also saw some very real and material challenges in the asset and wealth management industry. So for many wealth firms, managing tens of thousands of portfolios for many investors at scale is extremely challenging and extremely inefficient. So ensuring these portfolios align to the investment allocation that is set out by the target model requires multiple parties, manual processes, and multi-party reconciliations. So this essentially means that adjusting it in a timely manner is extremely difficult, resulting in a suboptimal investor experience. In addition to that, we found that there's limited access to alternative investments like private equity and private credit. So gated by limited liquidity and greater operational challenges compared to traditional assets, alternative investments have really remained out of reach for the discretionary portfolio space, meaning that many investors are unable to tap into that higher performing products that like alternative investments. And finally, now we knew that blockchain technology in and of itself could really solve these 2 previously mentioned challenges. However, we recognize that while we solve those challenges, blockchain technology in and of itself also has a few pain points that wouldn't allow us to get to that future ideal state that we want to get to. So we really dove deeper and explored to solve a blockchain pain point, which is the fragmentation across different blockchain networks. This fragmentation really dilutes that original promise of having a shared ledger as the single source of truth. Now, the cool thing about this proof of concept was that we were able to see benefits from all angles. And so we validated this throughout the initiative. By enabling automatic rebalancing for portfolios at scale, we were able to take a process that currently is around over 3,000 steps and just brought it down to just a few clicks. And then in addition to that, by leveraging smart contracts for near instant settlement of buy and sell orders, we saw that there's a potential to eliminate cash drag from these discretionary portfolios. So, and estimated that to be around an annual savings of 18% or so. And then finally, with the harmonization of traditional assets and alternative investments, we found that tokenization could enable a $400 billion revenue opportunity annually for the asset management industry. So what do we actually do to get to these benefits? Well, we deployed a series of smart contracts onto the Onyx digital assets network to help solve for some of these inefficiencies. And essentially, due to the programmable nature of these smart contracts, we were basically able to have these smart contracts talk to each other and automate much of the end-to-end investment and rebalancing flow. In addition to leveraging the smart contracts that you see on here, we also brought together a group of world-class asset managers and blockchain solution providers to bring together this end-to-end ecosystem. Apollo, JPMorgan Private Bank, and WisdomTree all provided test traditional and alternative investment funds to be tokenized. In order to show the disparate nature of having a multi-blockchain ecosystem, we had Onyx and Oasis Pro tokenize these funds onto 3 different permission blockchain networks: Onyx Digital Assets, a Provenance permission zone, and a private Avalanche subnet. In order to really connect these networks, we then deployed 2 interoperability solutions, Axelar and Layer 0. And we also leveraged Biconomy's account abstraction solution to really show how we can make a seamless experience for the fund managers. And finally, we deployed discretionary portfolios on the Onyx Digital Assets Network for a variety of investors. These portfolio smart contracts track the investment positions of the investor's portfolio across all of these 3 chains. And so then we brought together one final piece, a fully automated rebalancing system called Crescendo. So Crescendo is essentially that culmination of the smart contracts that I mentioned, all of these asset managers and blockchain solution providers, such that we can automatically adjust an investor's portfolio to remain in line with the target goals. So this was a really, really quick speed round through Project Guardian. If you want to learn more, you can definitely read our white paper that we wrote with Apollo on the Project Guardian initiative. And then also, if you want to learn more about alternative investment fund tokenization, we co-wrote a white paper with Bain & Company, so feel free to also scan that second QR code to learn more there. So before my other panelists join me on stage, I guess what's next for ODA? Well, as I previously mentioned, we are focused on investment fund tokenization. So with that, and with this learning from Project Guardian, from Crescendo, that's one of the areas that we're really trying to build up in. We see that as the first step in building this asset ecosystem. And so we're looking at really doing it in two ways. One, natively through our own capabilities, and second, as I mentioned, we're opening up ODA. So really looking to bring on third-party tokenization platforms to plug into the Onyx Digital Assets network. So if anyone wants to tokenize their assets on our chain, definitely let me know. We'd love to chat after this. But with that, I'll wrap up here and then I guess bring the other panelists on stage. Thanks.
Fantastic, fantastic. So if we can get the rest of our panelists out here, let's get started and dive a little deeper. Alrighty. So before we do the deep dive, why don't we start with some intros and maybe your role in the tokenization industry outside of Project Guardian, as Stephanie has already kind of shown us everyone's role in that.
I guess I could go again. I'm Stephanie. As I mentioned, I'm a product manager on the Onyx Digital Assets team. Onyx Digital Assets is a tokenization platform as part of Onyx by JPMorgan, so really focusing on tokenizing and issuing assets on-chain.
Hi, I'm Maredith Hannon. I'm head of business development for WisdomTree's digital assets business. As Steph mentioned, we have a full suite of tokenized products that I'm sure that we'll get into a little bit. But more broadly, WisdomTree is an over $100 billion ETF issuer, and now we are really, really focusing on the blockchain-enabled finance migration. We think that it's the next evolution in the best, most efficient wrappers for end investors. So looking forward to talking about that a little bit more, as well as our retail app that we actually just went live with almost nationally this week.
I'm Anthony Moro, CEO of Provenance Blockchain Foundation and Provenance Blockchain Labs. We are a layer 1 blockchain built in the Cosmos ecosystem, founded by Mike Cagney Juno at Figure in 2018, and has since grown with Figure's help largely, but with others as well, to being the largest layer 1 public blockchain in the world as measured by real-world assets. There's a $10.3 billion of RWA across credit, private company equity, and several other asset classes. And the Project Guardian was a big stamp of approval for us, and we were really happy to work on it.
Hi, I'm Bob Yostpille from Oasis Pro. Oasis Pro is an end-to-end digital asset solution. We have a primary issuance marketplace, a secondary trading platform, a transfer agent, a tokenization platform, and a few other products that are in development. We focus on providing infrastructure to large institutions such as JPMorgan and Apollo. We were thrilled to partner with them on the Project Guardian initiative. It's great to be here, and thanks for having me, Jason.
Thanks for coming on and sharing your insights, everyone. So, how did you guys choose each other? Are there certain differentiating factors that each of you possess or that you saw in each other to be included into this proof of concept? And how did you choose the specific blockchains as well?
Yeah, I think so. Onyx really led that choice in the partners. For us, working on Project Guardian was not only a way to show the future of fund tokenization, but also a way for us to really learn more about what's out here in the blockchain ecosystem. So we really wanted to work with blockchain networks that we've never worked with before, like Avalanche and Provenance, and then also wanted to work with both an EVM and a non-EVM network, so really trying to see what that world would look like with both of them. And then in addition to that, if we look at the interoperability solutions that we chose, we went with two different protocols. one that was more of a hub and spoke model, and then the other one was more of a point-to-point. So we use that as our chance to really analyze what are these different models, how do they work, and then of course partnered with different asset managers who provided both traditional and alternative investment funds. And then in terms of tokenization, we had Oasis Pro tokenize onto the non-EVM chain. So that helped in terms of seeing what is that world from different perspectives and different models and systems.
Makes sense to me. Makes sense to me.
I would add from the WisdomTree side, we were absolutely thrilled to be a part of this, really for 3 reasons, though. If you think about strategically what WisdomTree is focused on, it's blockchain adoption and technology, which I mentioned before, but it's also fixed income and modeled portfolios. And so this proof of concept really brought all of those 3 strategic pillars that we're working on, both in traditional assets and in on-chain assets, together in one, and to really showcase the future of what this could look like and where we could move to going forward, which I thought was really exciting. And a big piece of our ethos as well is to focus on solutions to problems. And this is a great example of that, where if you've ever worked in an OCIO type or a model portfolio type of business, rebalancing is a huge pain point. It's a very manual process. There could be a lot of errors associated with it, especially if you have alternatives. So I just thought this was a great example to showcase how this could really impact, not only from a process perspective, but what it could mean for the end investor in terms of the types of assets that could be offered, maybe even cost down the line, but especially in efficiency internally.
So let's dive a little deeper into that. There's a great way to get alternatives, right, into model portfolios. Are there any specific alternative asset classes that you're seeing have a little bit more demand or be wanting to be included in model portfolios than others? And do some of those alternatives have more infrastructure than others?
Well, sure, I'll take that. I think there's definitely interest in, private funds, private credit funds, real estate funds, et cetera. I've heard several times over the past couple of days about how tokenization democratizes access to these alternative asset classes and opens up a new pool of investors for large fund managers. So they don't need to go to their typical institutions if Main Street investors have access to fractionalized shares in these funds. I think it levels the playing field, and as I mentioned, I think it gives access to these alternative assets that typically generate higher yields than these investors would be getting in a typical 401k plan or something like that.
Yeah, and just to add on to that, I think the way we've been seeing it is that they're more so focused on really diversifying the type of returns that you can include in model portfolios. So it's not necessarily, I guess, like, is there a specific alternative investment fund that we've particularly seen people talking about? But I think it's kind of like, how do we diversify the returns that we can provide? Because not all alternative investment funds are necessarily the right fit. Like, we're not going to tokenize every single thing if it doesn't make sense. And then in addition to that, like, if we think about alternative investment funds, one of the key pain points is the limited liquidity. And so the type of funds that would probably benefit the best or work the best are the ones that have more liquidity, so maybe a hedge fund structure or ones that you can kind of sell out of without being locked in.
Well, if it doesn't make money, it doesn't make sense. So, how do you, there's operational savings that you touched on during your presentation. I think one of them was 18%, right? How do you see the money from those operational savings, being reallocated? Is it, to provide further infrastructure or research? Is it passed on to the investors? Do we simply save the cash? How do you see that being reallocated?
Yeah, so from that specific point about the cash drag piece, where we think that there could be an annual savings of 18%, it's really thinking about it from a savings for the investor's perspective, right? They're able to actually invest that amount and get some benefits from it instead of it just sitting in their portfolio, not doing too much. So that's one way, like, it could benefit the investor. The other thing that we thought about is that not only is it like a cost saving, but you can use it to grow the pie, essentially. So that $400 billion revenue opportunity number that I mentioned, that's essentially, like, if you think about it, if we grow the amount of individual investors who are investing into alternative investments, the opportunity of revenue there just just grows. And if you think about the benefits to the other participants in the space, like the fund managers, the wealth managers, their assets under management also continually just increases. So I think there's a way to both benefit from those cost savings, but then use that as well to like grow the pie of opportunity.
Makes sense to me. Anyone else want to add any color there, or should we move on?
Yeah, I think not everything is a good use case in blockchain. So it's, tokenizing assets for the sake of tokenizing them isn't a good reason to do it. But if you can change processes, if you can reduce intermediation, if you can save money, if you can reduce time, it's certainly worthwhile. The big use case on Provenance is obviously what Figure has done with home equity line of credit and with mortgage. And in the process of issuing a home equity line of credit and then warehousing it and securitizing it, they've taken 150 basis points out of the process. A lot of it is audit expense and legal expense because it's a more efficient process, and the warehouse and the final ABS underwriters don't need to go back and re-audit something that has been audited once, been written to chain with an immutable proof that the audit is true and accurate and that nothing has changed. So there's dozens of offline documents. They write a hash to the chain. If the hash is still valid, you know the underlying documents are still valid. So that 150 basis points is a lot in a very thin margin business. If you have friends in the mortgage industry, they're happy to write you a mortgage. Nobody really wants to write you a HELOC because it's the same amount of work for a fraction of the assets that go into the end product. So Figure and its partners, which are almost all of the 20 largest mortgage originators in the US, have taken that 150 basis points out. They're keeping some of it for themselves, but they're also reducing rates to borrowers, which it does some inherent good. I don't think we're doing God's work up here with tokenization, but if you can save some money and put some money back in borrowers' pockets, it is a good thing.
I like it a lot. And actually, Maredith, I think this may be helpful, or just really anyone, but does this open the door for more people to have access for wealth management solutions, such as robo-advisors at lower minimums? How does Project Guardian kind of help envision that future?
Yeah, I would say just more broadly, I mean, we're obviously not an alternatives manager, but especially on the fixed income side and some of the work that we did here, I do think that it also, beyond just opening access, it can also create more personalization, which is really exciting too. So if you think about just in this test case, it's 1,000 model portfolios that are rebalanced. Think about if you could do 10,000 and 1,000 different variations of different types of allocations, different types of risk profiles, where today, most of the big wirehouses would have, 20 to 30 maybe at most, because again, it's so operationally complex in order to rebalance them. So I do think that beyond even just access, there's also a personalization element that I think is really exciting on what this could potentially mean. But to Anthony's point, that doesn't mean that necessarily everything should be tokenized. It needs to make sense for what the value is, but I do think that this is an example where this is an operational process that could be executed more efficiently, and that leads to cost savings, it leads to personalization, it also just leads to more opportunities from an investment selection perspective, which I do think is really exciting, but definitely more to come. This was step one before we reach that nirvana.
So what's the next step? Stephanie, now that Project Guardian is, or the project is complete, what else is Onyx Digital Assets focused on? What can we expect in the near future?
Yeah, I spoke about this a little bit, but I mentioned, Project Guardian was really that first step, as Maredith mentioned, right? And we want to see how we can take it forward. So investment fund tokenization is where we're really focusing a lot of our time in. And so we're working with fund manager, distributor, fund admin to really tokenize an alternative investment fund to see what that could look like. And that would be like that first step. And hopefully we get to that nirvana stage of crescendo. But for us, that's a very big focus area of how can we kind of productionize, industrialize what we built out as a proof of concept.
I would just jump in. To get to that nirvana it's a long process, right? In order to accomplish the goals of Project Guardian, you really need to have the fund manager be able to choose from hundreds or even thousands of available funds that are tokenized on blockchain, and we're obviously not anywhere near there yet. We've had some early and big successes. Hamilton Lane and Apollo and the BlackRock Bildl is, I think, a game changer for the industry because everyone was asking before, why should we tokenize a fund? What are the benefits? And it's hard to answer that question today if you are in a vacuum. To tokenize a fund either through a digital feeder or a digital twin is not really ideal from a cost or risk perspective in isolation. But if you can get 1,000 funds done, then you start to get into the ability to use them as collateral for cross-collateralization for other securities. You can lend against them, which is the absolute killer use case, and then maybe a secondary market develops as well. But put all those things in the mix with the ability to really finally blow up the 60-40 traditional investment portfolio and invest like the Yale University endowment on a person-by-person, separately managed account by separately managed account basis, you start to rewire finance. And I think we're going to see, certainly before my career is over, $700 trillion of financial assets come on various blockchains. It's inevitable. It's cheaper, faster, and safer. Just like when I started a long, long time ago, we were on Excel spreadsheets for cap tables, and now cap tables are in the cloud. It's the same evolution.
Very cool, very cool. Bob, Oasis Pro had a unique, role in this project. How are you guys looking to continue working with different, banks, asset managers, and so forth? What can we expect from Oasis Pro?
Well, just continuing on the comments from my other colleagues here, I think the momentum in tokenization around fund products since the Project Guardian announcement in November has really seen an acceleration to this space. We are talking to a number of huge money center banks that have not only a trading platform, but also asset management, wealth management businesses who are really tuned in on this. I have spent probably 10 years of my career managing fixed income trading technology businesses at Bank of America and the Royal Bank of Canada. When institutions like that are interested in this space and spending money to develop products and develop the technology necessary, it's certainly a good sign for what we're doing in the digital asset space.
Can you tell us a little bit about what we can currently find on Oasis Pro? I think you guys have a wine fund that you guys have recently tokenized.
Yeah, we have a tokenized fine wine fund of French wine from the Bordeaux region. You don't get to drink the tokens, so it's an investment. Actually, some of these wine funds have typically generated an annual return of 15 to 18%, which is really interesting. This is a unique product that was brought to us by some former MakerDAO founders who have an interest in wine. We have that. It's going to be launched, I think, towards the end of May on the platform. We also have an ETH staking product called Methodic in Diamond Standard, which is a tokenized fund with underlying fine diamonds. We have a few other funds in the pipeline, so keep your eye out on social media for various announcements around that.
We'll definitely be keeping our eye on it for sure. Catch it on the Security Token Show. But, Anthony, you guys, Provenance has largely been working with Figure. You alluded to it earlier. However, you guys have been very clear that you guys are very separate entities. So I do want to know, what can we expect in the near future in terms of working with multiple others in the space, and why should people look to work with Provenance?
Good question. It sounds like it was teed up. So it's important to put Figure in perspective with the rest of the real world asset industry. So we just had our 1Q foundation call, and in the first quarter, Figure put $1 billion of HELOCs and mortgages on Provenance. In digitally native, spun up, issued, ledgered, warehoused, and then put into rated ABSs and sold largely the TradFi way, but some DeFi as well. The entire tokenized treasury market is $1 billion. And it's been up for 3 or 4 years. So Figure's doing every quarter what the entire tokenized treasury market has done in its entire existence. And not to say that tokenized treasuries aren't good, I'm just trying to give some perspective on size. They keep us very busy is my point. There's a lot of stuff going on. But that being said, Apollo and Hamilton Lane and others have put assets on. We're working with a lot of other fund, particularly on the back of Project Guardian and the BlackRock announcement, other fund complexes coming on as well. And then lots of alternative assets as well. So I'm not sure if Cole Snell is in the room, but a company called Infinio is following the Figure playbook by putting digitally native whole life insurance tokens onto chain. They're going to Nice. They're gonna follow the figure playbook. They're gonna warehouse them and they're securitize them. So replace HELOCs with whole life insurance. Great use case, right? Saves time, saves money, saves process, and you can really start to recreate asset classes if you're doing it the right way.
Makes sense. I'm excited to see all this, come live, and we'll be tracking it as well. Meredith, what is, you guys have 13 tokenized funds, is my understanding. What's the distribution process for you guys? How do you see, tokenization also, working into some operational side for WisdomTree?
Yeah, sure. And I think there's two sides of this in terms of opportunities. It's obviously from an operational process perspective, but then there's also the utility of these tokens. And I think what we're really excited about is the fact that when you put tokens on chain, that means a token that's a private equity token can sit beside an S&P 500, that can sit beside a gold token. So if you start to think about even trading, swaps, peer-to-peer transfers, but a big one is also spending. So how can you think about, instead of having to sell out of your brokerage account that you have to do today and wait 3 business days to then swipe your Visa, could you just swipe your Visa from your brokerage account and actually have that done seamlessly? So that's what we're building out through an app that I mentioned before, WisdomTree Prime. We did see that from a distribution perspective, there is friction in the process to come on chain today. And we think that, especially for retail consumers, that is just a barrier to entry. I think about anyone up here can, manage their own private keys in their own wallets and have no problem. But I think about anyone in my family who's not in finance, or even just people who want an easier experience. How do you think about just accessing your financial life on your phone, and how do you make it simpler? So what we did was built out an app that, if you're like me, you have a checking account, a savings account, a brokerage, a mortgage. I've got 12 different apps probably on my phone, which is probably why the thing's dead half the time. So putting that together in one app, and then being able to make that utilized in your daily life to be able to pay and send, and a lot more features coming on too. So like I mentioned, we have 13 blockchain-enabled funds. They're 40 Act. They're registered and regulated just like any of our other products. So really, really focused on security, really focused on regulation, and then it's just enabling those to be on chain to actually deliver that end value of being able to use your money more effectively, being able to be in the market, in a money market fund, earning 5% versus earning pretty much nothing in your checking account. That's really the ethos that we're going after here. And we think that from a distribution perspective, that's a huge need in the market and a problem to solve. So that's what's focused on from the retail side. We'll also be coming soon, launching an institutional platform as well to be able to access tokenized products too. So be on the lookout for more information on that in the next few months.
That is very exciting.
Yeah.
Full disclosure, I do have the WisdomTree Prime, and it is very smooth. I'm a big fan.
Thank you. We appreciate you. Thank you.
Okay, and can you expand a little bit on the recent news? You guys going more national and whatnot?
Oh, sure, yes. We got our New York Trust Charter license, which is a huge accomplishment, I'm sure, as anyone in this room can appreciate, working with regulators. So super excited there. And then we announced yesterday that we are also live in New York and 41 other states. So we cover about 75% of the country now in terms of the population. So you'll see a lot more in marketing and TV ads and all of that later this year. But we're really excited to bring this to market. And we do think, just considering we started this project many years ago, before 2022, 2023, with everyone here knows what happened in the news in terms of trust and counterparty risk. So we do think that there's definitely an opportunity for a trusted partner to launch a product like this, and we're hoping to be that.
So as you can all see, we have a great panel of people that really own their place in the space here. So shifting back to Project Guardian, right? Stephanie, you mentioned some of the future plans for ODA, but what do you see as some of the biggest obstacles in the near and long-term future?
Yeah, I think broadly we've all heard about the same challenges, that we need more standards, in order to make sure that these assets and tokens are portable, but also just for different chains to work with each other, right? So I think standards is a huge one. But I think where it's a little bit less tangible that a lot of the folks here today are working towards is really proving that value add, right? We keep on doing all of these cool projects, and Carlos talked about the Biddle Fund, but I think all of these are really steps towards proving that value add. I think until we are able to prove that, it will be very hard to get the adoption that we want. And so I would say that's probably, in my mind, like one of the biggest obstacles and biggest challenges that we're going to need to continue building, continue proving out the use case, and continue proving out how much tokenization can provide operational efficiencies, cost savings, also just open up new opportunities for revenue. And I think that's one thing that many different players in the industry need to either work together to push this forward, or start just pushing their productionization and getting the word out there.
Anyone else want to volunteer some opinions on what some of those obstacles would be? Any other obstacles, I guess?
I mean, I would add adoption for sure. To my point before, I mean, I think a big thing is, and to Anthony's point, you can tokenize anything, but if there's not a market for it and not a buyer for it, it doesn't really matter. So I think that's a huge focus as an industry. And I think what's great is we all are coming together, and this is a great example of this, where all of the financial institutions that in traditional finance, we do this today, where we're counterparties to each other. We're starting to figure out ways that we can come together, and these are two great examples of actually how to do that from a technology perspective with Provenance and Oasis Pro, but how we can actually interact with each other, and so that liquidity is not so siloed, and we can actually make these transactions happen in the way that we need to from a regulated financial institution perspective, but then from a technology perspective, we can interact with other institutions that have different types of regulations or different types, whether they're on different chains or on different platforms. So I think we're moving in the right direction, but still a lot of work to do, obviously.
And make no mistake, TradFi is entrenched, and they don't want to be disintermediated, full stop. And it's going to be a long road to get there. I have a friend who is in a top 10 asset manager, and he's in charge of blockchain, and he's a managing director and a pretty serious guy, and all the traders call him Bitcoin Boy. He doesn't like it. So yeah, there's people are going to be disintermediated, and a lot of revenue is going to come out of the financial system. So my old firm, BNY Mellon, has $4 billion a year in annual security servicing revenue that I think a lot of it goes away. So you either lead or you're consumed by it. And if you are neither, you try to make the inevitable last longer, at least until your career is over.
Yeah, and to that point, the adoption by large institutions, I think the technology teams understand the benefits, they understand the rewards that this technology offers. But in these large institutions, you have to go up the chain of command, and that chain of command will include people in risk and compliance who don't necessarily understand the technology. And the first thing they think of when they think of a blockchain is Bitcoin and crypto and nefarious activity. So, I think, JPMorgan has been at the forefront here, for organization that large to be leading the charge says something about the leadership in that organization.
100%. And we've seen some institutions, had conversations with people that have like full departments, such as JPM. And then we have other ones that have maybe 1 or 2 people allocated towards exploring digital assets, but maybe aren't ready to, put their full foot in the water, if you will. So lots of even diversity there in terms of, who you can work with or who can move a little faster than others. I do want to go into the forward-thinking questions, though. We did talk about some challenges. We do know that there's still a long road ahead to get all capital markets on-chain, or at least as much as we can. But what does a future with a tokenized portfolio of tokenized assets look like? Essentially a security token of security tokens.
Yeah, I think in the proof of concept for Project Guardian, we showed one example. We showed like a separately managed account example, right? So having these model discretionary portfolios, and you're able to kind of align to one of those model portfolios as your own personal financial goals and my own risk appetite. So that's one way that you can do that. And I think Maredith talked about this earlier, but what we really like about that use case is that personalization, customization aspect to it. Everyone has different preferences, not only in risk appetite, but also some people may want an ESG-focused fund. Some people may want a tech-focused fund. So that's something we look to explore within the Project Guardian POC. We actually had some customization built into it. So some of them had ESG-focused passive fund. And so those are ways I think we can really leverage like tokenization to help with that, to your point, customization.
I like it. Yeah, you can get very granular with it, and so you can get it's fantastic. And by the way, there is a large transfer of wealth happening right now. So the new people that are receiving some cash, they have different risk appetites, different wants into what they want to invest into, and I'm sure their financial advisors are scrambling to figure out how do we make this happen and keep our client happy. So I think you guys are making this possible. But to that end, how will strategies change for evaluating and selecting alternative assets? Now that you would say that now that they're tokenized, they might trade a little bit more like a stock at least. So are there certain things that previously weren't really accounted for that now are? For example, analyst reports, earnings calls, or whatever. How do you guys see that changing?
Well, you're still going to need analyst reports and earning calls if it's a security. So there's, particularly on a national exchange or a national exchange that runs on blockchain or an ATS, SEC rules are SEC rules, so that's not going to change. But you will have different asset classes that we've never seen before. So life insurance as an asset class is something you can't invest in today. But if coal winds up chopping it up into $100 tranches, and now you can get a very nice risk-adjusted return, extraordinarily safe, and it yields 5%, great, let's do that all day. It has a place in a portfolio, particularly if you're now, again, not the 60-40 portfolio, but the Yale University endowment, where I want timber and I want wine and art and diamonds. Who's your CIO, by the way? Diamonds and wine? My wife? Is she? Anyway, it's a weird combination. It's great, awesome. But yeah, we will need new constructs of how to manage these things.
I think the other thing to think about too is I think there will be a change, right? I think that we are able to do a lot more because of tokenization, but just from the other side of it, there's a lot of things that tokenization doesn't necessarily fix immediately, right? Like we keep on talking about it, tokenization is amazing, this is our job, but it's not, God's work, and it doesn't do everything that we need it to do. So for instance, it doesn't necessarily provide more liquidity. There's still a lot of work there to create the secondary market. It doesn't solve the KYC subscription process, anything like that. Tokenization doesn't really help the qualified purchaser, accredited investor requirement. So in terms of distributing it out to more individuals, there's still that blocker, right? That's just there because of the law. So I think there's still a long way to go, and to think about it, I think we need to focus on that first step, right, of what can tokenization solve, and then also think about, okay, what does it not solve, and how do we bring it all together?
And what are the implications of that? I completely agree, and I think to bring these two themes together, it's really about there's the technology aspect of what we can do, and then there's the regulatory framework of what is allowed, and that there's still KYC requirements, there's still, you have to be a QP or an accredited investor, so that's not going to change. So it's marrying these two to say, how do we make it more efficient, how do we make it more effective, but at the same time still abiding by the rules of the road. So I do think that's the intersection of that is where we're moving towards.
And let's touch on regulation actually. So, and just regulatory in general. Project Guardian is part of the MAS right out in Singapore. But are there other jurisdictions that you're also seeing being more favorable than others or more Web3 friendly?
We're mostly US based, so
fair.
Please, yeah. Any other?
Yeah, we're US as well. You can do most of what we want to do in the US. I would love to see more clarity around the ICOs of the layer 1 platforms. I don't think we're going to see that anytime soon. We would, I like to say, we would gladly file Ks and Qs, but you can't pay your validators in securities. So there is no construct for layer 1 to register. The rules just simply don't fit either way. But if there were rules, it would be great.
Fantastic. All right, so let's go down the line and share with us either a prediction or just a last-minute message that you want to make sure the audience captivates from Project Guardian or what you guys are working on individually. Maybe start with Bob over at Oasis.
Sure. I guess my takeaway from the last 2 days here is, I joined Oasis Pro a little over 3 years ago and started attending conferences then. And it's great to see many of the attendees here who were at those conferences in the early days. and the progress that we've made, not only as individual firms and businesses, but as an industry. And as I mentioned earlier, the momentum coming out of the Project Guardian announcement is tremendous. And I'd like to thank our partners, not only here on the stage, but out in the audience, some who I've met over the last couple of days, for really being collaborative and creative and moving the ball forward here. So a lot of good things to come.
Just going down the road. I think I'm most excited, so I'll give everyone it's public, so nothing that is hidden. There's a couple of S1s filed for a company called Figure Certificate Corp, which is obviously Figure and the team. But what it is a yielding stablecoin filed under the 1940 Act, but a very arcane part of the 40 Act called a face amount certificate. If it's approved by the SEC, and fingers crossed, it does, for the first time ever, you're going to have a stablecoin that yields like a treasury. And it's an S1 security, so banks can transact in it, because SEC registered securities trump crypto within big banks. So we're very excited about the potential of that coming. So if you play that out a little bit further, think of a PayPal app on your phone, but instead of it not yielding, it yields. And you could buy, theoretically at Starbucks with it. You could replace your checking account, your savings account, your treasury account, and only have one wallet that holds a 5% yielding stablecoin that can be used for really anything that you use cash for. What I like about it is it reinvents money, and it's more efficient. And again, not doing God's work, but you're putting a lot of money back in people's pockets. So things like that are enabled by blockchain, like you couldn't do this without blockchain. It's enabled by blockchain, extraordinarily exciting. $700 trillion in the next 10, 15 years on chain.
I completely agree, and that's a big problem that we're trying to solve too, and I think that's what's really exciting is just how you interact with your daily finances is going to be revolutionized. And what I'm really excited for is the day that we stop talking about the underlying technology, because it's just so easy to use and it's just a better operating experience, like using your wallet. I don't know about anyone else, but I use my Apple Wallet for pretty much everything. I don't take a card out anymore. So you can see how that could really easily work, where it's not that much of a shift in actual consumer behavior, but just the underlying is better than what we have today. So I'm excited about that.
I'm excited about, I think there's been a ton of innovation in this space in the last, handful of years, despite things, going not too great and things now running back up. I think there's still been a lot of really awesome use cases that's been shown. From our side, we are really also excited just to continue building up our own ecosystem. And so, as I mentioned, we're opening up our chain. And so what that means is being able to bring utility to these assets that are on our chain, and hopefully bring in other participants and developers and third-party owned applications. So I think that is a really exciting opportunity for ODA.
Fantastic. Well, you have made huge headlines when this came out. We were very excited about it. I'm excited to see what's come next, both individually and as a group. So fantastic work. Thank you so much for coming and joining us, sharing your insights. Like I said, we're excited for the future. Can we get a round of applause for our Project Guardian?